Welcome back. This is part 2 of the final accounting presentation. This part 2 will cover only the preparation of Schedule A. And again, we are doing this presentation and the accompanying final accounting for the mock estate of Cynthia Porter. The materials you need to prepare the Schedule A to the final accounting of Cynthia Porter include the blank final accounting form that I provided to you in the course. You will find that online. It's in a word processing format. The next item you need is a spreadsheet that's also available to you in the course, and it's the spreadsheet for the estate of Cynthia Porter. That spreadsheet includes the checking account transactions and a listing of the distributions in the estate that have already been made. The way we're going to work with this presentation is you will have the checking account you will have the blank final accounting document, and you will prepare the final accounting document as we work through each presentation, this being the presentation covering Schedule A. Okay, so you should have your blank final accounting form in front of you, on a computer, if you will, or you can print that and just set it down in front of you and handwrite the answers in and then type them in later. Might be a little more efficient. Now, not to be confused, this is just a review of a previous document that you prepared, and it's important to review the inventory before you do the final accounting, and the reason for that is because the final accounting is like an addendum, more or less, to the inventory. Alright, so we're going to look at the inventory that you prepared in the previous lesson to understand how the final accounting relates to it. First of all, this is the first page of the inventory that you prepared. The date of her death is on the first page. The caption and title, etc. are here. That's page 1. The second page of the inventory that you prepared in the previous lesson lists all the personal property, wherever located, that the estate had at the time of her death, and the estimated fair market value of each of the items described in the inventory. The total amount of the inventory would be this $763 amount, and since all the property that we listed in the inventory constitutes the personal property, and there were no other properties included in the inventory, such as real property, that constitutes the entire value of the estate that we knew at the time of the inventory. Okay, so now it's time to take some action. First, you need to make sure you have that spreadsheet for the Cynthia Porter estate that I'm going to show you a picture of here in just a minute. You also need to make sure that you have a copy of the blank final accounting document that I provided in word processing format. So it's blank, it's in word processing format like Microsoft Word, and you need that in front of you, as I mentioned earlier. As you watch the presentation, complete the blank final accounting document as I instruct you to do. And then you will use the information that I provide within this presentation to do so. So I'll give you a minute to make sure you have those two items in front of you. The spreadsheet looks like this. Okay. Let's begin by looking at the spreadsheet now. You can see that the spreadsheet's first section here is a ledger of the checking account transactions that have taken place in the estate. Some of the things that you see listed on this ledger might look familiar. Some of them may be different. The second part, right here, are the distributions made in the estate. Reflecting back on the Part 1 presentation for this, recall that distributions are basically distributions made to the beneficiaries of the estate. In our case, Mr. William Porter is the sole beneficiary of Cynthia Porter's estate. That's what she wanted done according to her will, was to give everything to her husband. So these are simply distributions to Mr. Porter. A couple of footnotes down here. One is that I have an asterisk next to the items in this list, this spreadsheet, that are not included in the final accounting. All right, and so it's this is meant to remind you that if an item is included in the inventory, unless there is some kind of change in value, because remember the whole idea of this is to show the value of the estate. The final accounting more or less explains the value of the estate and the transactions that have gone on during the administration of the estate. And so if you'll read this, asterisk, not included in final accounting because this asset is already accounted for in the inventory. These items would include the big bank account of $5,458, the certificate of deposit proceeds of $1,394, the tax refund of $229, and recall that she owned 1/2 of that refund, and therefore only 1/2 of it is subject to administration by the estate. The cash found in her wallet of $148, her final employment paycheck of $3,099, and the deposit from the health insurance refund of $1,712, moving down to this reimbursement from the medical provider of $511. So if you were to look at the inventory schedule done correctly, these items with the one asterisk next to it, these were already included in the inventory. Now, so was, as it notes here, in the footnotes, the contract signed by Ms. Porter had a $1,000 penalty, so the PR, meaning the personal representative, only received $9,000 of the $10,000 estimated in the inventory. So now we need, in a later schedule, we'll account for this $1,000 loss. But for now, it is not relevant to the Schedule A. All right. So next slide, what is relevant to Schedule A? Schedule A should reflect only those items received during administration that are not shown on the inventory. So this is redundant, but I'm just trying to help you understand clearly that we're only going to add to Schedule A receipts, those monies or receipts of items that were not included on the inventory. In Part 1, I also mentioned that the way we classify an item is determined by looking at another statute under Chapter 738 of the Florida statutes. Entries. An entry would be any items that we need to put into the schedule. We call those entries. So it's like an accounting term. enter whatever number amount on the Schedule A or B or whatever. So the entry, that's what that term is meant to mean. And notice that they have, this is from the very last page of the inventory, by the way, just copied and pasted it right from there. Notice that Schedule D and Schedule A have different functions. So we're going to work with Schedule D later, and right now we're working with Schedule A, but they do point out you want to be careful not to try to schedule something on A that really goes on D, or on D that really goes on A. And we'll work with that a little bit. Don't get too wrapped up in that. I just wanted to bring that to your attention beforehand. Alright, so the next slide, going back to the same spreadsheet of the Cynthia Porter estate, and if we look at the checking account section, this top part, that's where we're going to find items that might belong on Schedule A. Alright, we already identified in this footnote down here that some items with the asterisk are not going to be included in the inventory, in the final accounting Schedule A, because they're already in the inventory. So we are going to exclude those in this conversation at all in the Schedule A. So now we need to look at this and ask ourselves, what items in this list at the top, in this list of the checking account, constitute items that were received, receipts. What items were received by the personal representative since the inventory? So I'll give you a minute to think about that before I proceed to the answer. Okay. Hopefully you found that this deposit received, so a deposit indicating it was money received and placed in the bank, of $385, described as the interest earned on the Sam Smith note, has been received since the inventory. Alright, so the inventory did include a notation about the note, but this is interest received. Alright, so as money accrues, as interest accrues, it becomes an asset. The personal representative would then receive that asset, and since it's a cash asset, the personal representative would deposit it into the checking account. Alright, moving on. Here is more interest earned on the Mildred Moore note. Again, the Mildred Moore note is listed in the inventory at its principal value, just like the Sam Smith note, but since that inventory, some interest has been earned on it, and that cash interest from the note, meaning that someone paid the note and there was some interest earned, that cash was deposited in the bank. So as a result, these two items of $385 and $1,119 are receipts that were received, and they're not listed on the inventory. They differ from what was listed on the inventory. So I'll give that a minute for you to kind of comprehend. Okay, so now we're at the important part. This is a really simple aspect of once you've made that decision that according to the facts on that spreadsheet that items need to be entered into Schedule A because you've identified receipts that were monies received by the estate since the inventory, it's time to list them on the final accounting. Now each of the final accounting pages, the schedules, has this section where you're going to type in it's going to differ from semester to semester. So just type in the date you prepared your inventory in this little blank line that's on the blank form. So get out your blank form, and in the from, you're indicating when does this period begin? When does the final accounting period begin? It begins with the date of our inventory, because our case scenario, there has been no inventory, no accounting at all since the inventory. So type that date in your inventory. The through indicates the end of this accounting period. The end of this accounting period is today's date. So whatever today's date is, type that in here. Just delete that text if it's in your form. Alright, so the final accounting form, Schedule A, should have in there your dates now. This text is already typed in your form. You don't need to change anything there. The date. If you look back, if you have it printed in front of you, if you look back to that spreadsheet I gave you, I did not include dates on that. And so you can make up dates that are within the count. They have to be within the accounting period. You can make up dates after the inventory up until today's date, or you can simply type in X's for the dates. Not too concerned about the dates for the purposes of this project. Here you describe the items. If you look back to that that spreadsheet that I gave you, it says interest earned on Sam Smith note, and I just typed in exactly what it says on the spreadsheet into Schedule A of the final accounting. Alright, the income. This is an income transaction. Receiving this money constituted income pursuant to the Principal and Income Act statute, Chapter 738, that I told you about earlier that we're not going to dwell on too much. I'm giving you the answer to that. And that's $385. And we don't want to put this amount in both columns. You want to put this amount in the income only. And principal was not affected by this transaction, and therefore you'll type in the amount 0.00, and this is 385.00. And the same is true of Schedule A's second entry. And then the date again is only relevant in terms of that it has to be within the accounting period that you've already identified. But you can put X's there like I have done. And describe the receipt, which is in the spreadsheet, interest earned on Mildred Moore note. Again, it's an income transaction of $1,119.00 under the income column, and the principal is 0.00. Now you total these two numbers and you should get $1,504.00. You total these two numbers and obviously you get 0. Okay, so you can fill that out. You maybe write it down on your on your blank form, Schedule A, right now, or type it into the form. But I'm going to go ahead and move to the next slide. I think it's the final slide. Yes, it is. All right, so now we conclude this presentation on how to prepare Schedule A. You want to save your final accounting. You want to open the presentation. Then you want to open the other presentation I'm doing next for Schedule B, and you want to continue to prepare the final accounting document. Note that this is a progressive document preparation exercise, So you're not going to save a document, you're going to add to it. So the final accounting document template that I've given you has Schedule A, B, C, D, E, and other pages that we'll go through. But for now, you simply want to know that you're going to save this document. You're going to reopen the same document when you get to Part 2, Schedule B presentation, and you're going to progressively build that document with Schedule B. Alright, you got some other presentations to cover. You'll complete the final accounting document, and when we reach that point, I will tell you to submit it for credit. But for now, save the document and watch the Part 2 Schedule B presentation. Thank you.